Welcome, everybody, to the INVESTTHIS Podcast 2.0 Wealth Mindset, where we dive into the minds of the successful real estate entrepreneur to uncover the tips and tricks that have allowed them to keep moving forward. I am your host, Scott Bauer, and I'm excited that you're here with us. Welcome back, everybody, to the 100th episode of the INVESTTHIS Podcast. I am your host, Scott Bauer, and you know what? Today, I'm super excited. Number one, this is the 100th episode, which is really a big deal if you think about it. For all you loyal listeners that have tuned in with us for each and every episode, I want to send I'm super grateful for you. And I'm glad that you're coming back each and every episode to check in and get more information. That means that you're getting something out of the podcast, which is exactly the goal. Another big thing about why the 100th episode is a big deal is because there's a big thing going on in our world right now, which is the COVID-19 coronavirus. And I'm here today to talk about, what this impact is and what's going on. So, first and foremost, it's going to be just me. You have yours truly here that's going to sit back and talk to you today about what I'm seeing in the marketplace, some changes that I've seen over this last couple of weeks, and just some thoughts. And I'm gonna tell you what I think about this whole scenario, because there's definitely a shift happening in the market right now, and I want to make sure that I can at least shed some light on what I'm seeing in the marketplace. So for all the families out there that are affected by the coronavirus, I hope that you're doing better, you're doing okay. If you are affected by it, or even if you have it, that you're staying inside, you're resting up, because from what I understand about it is, you should get better from that. But this is something that took the world by storm. This is something totally unexpected, something that was not, nobody anticipated this at all. I've been talking about with investors, with people for the last 3-4 years about when the next downturn is going to be. And this may be the start of it, and it may not. I guess we're still trying to figure that out. Matter of fact, if you came and tried to tune in last week for an episode, you would have seen that there wasn't one, and that was because of all of the changes that have happened and all of the things that we're all feeling right now with the coronavirus. And I wanted to make sure that I was able to provide some really good value to you. So anyways, we'll kind of get started here. With all the negativity that's going around in the marketplace right now, I want to talk about some benefits that this coronavirus situation has provided for us, and what I've seen to definitely be some of the benefits. So first and foremost, right now here in sunny Phoenix, Arizona, driving around, it is a ghost town, so to speak. Nobody's out on the roads. A lot of businesses have closed down, which is definitely unfortunate. However, if you're somebody that's out driving a lot, it's kind of nice. I mean, I gotta be honest with you. It's kind of nice to get out on the road and not have a bunch of traffic, not have bumper to bumper traffic, and just to be able to get where you want to go fairly quickly. So that's definitely a good thing. The other major benefit that I'm seeing out of this is for every business owner out there, and even possibly you personally, you can really eliminate and improve on the processes in your business. This time when people have had to stay inside, you've had to stay at home. Maybe you haven't been going to the office, but you've been working from home or whatever. This is the time when you should be spending, eliminating waste in your processes, or fine-tuning them, making them better. This is a time when you can reflect and kind of see, what is that thing that you've been doing that, or not been doing rather, that needs to be corrected, that needs to be fixed, and you should be fixing that problem right now. For the business and for you personally, I think that you should also be out there checking your personal P&L and business P&L, and really looking for unnecessary spending. Going through your P&L with a fine-tooth comb and eliminating the stuff that you don't need. Of course, we all get very, very busy, and sometimes you can't take a fine look at your P&L, and so you end up spending money on things that are just completely unnecessary. And so this is a time when you can sit back and really look at that to figure out, okay, what am I spending and what can I eliminate? So that's a big thing that I've done and continue to do. Another, another just kind of outcome that's going to happen from this, scenario that we're all dealing with is that unnecessary buyers and people. So we've been in a run up for so long here in the, the residential wholesale fix and flip, just in residential space. We've seen a massive uptick for values, really since 2012, I think is when it really started, the end of 2011, 2012. So we've had a good 8-9 year run on improved values. And what happens when that happens in a marketplace is that you get a lot of educators out there that put a course on that teach people how to go find deals and to make money. And so you get a lot of newbie investors that come in, and they really end up tainting the actual investors in the marketplace, because now instead of somebody who's well educated, knows exactly what they're going to be, should be doing, making fair offers and capable of closing those offers, now you get everybody just sending out mail, doing Google AdWords, pay-per-click, and they're crowding the space, but yet they might not be really actual investors or people that are capable of closing transactions that they make offers on, etc. So this is going to thin the herd out a bit, which is good for everybody who's been around for any length of time. So that's a good thing. And the buyers too. I mean, one of the things that if you're an experienced buyer, one thing you might have run into over this last year or so is that you weren't able to find deals because everything that was sent out, or any of the investors that were providing deals to you, these investors had gone on and found other buyers that were willing to pay way more for these same properties, although they might not be worth it. But just because of the uptick in the market, people were betting on appreciation, betting on the market that was going to go up, and so they were able to pay more money for these properties, therefore leaving the correct investors just high and dry. And so this is gonna eliminate those buyers. It's gonna take those buyers out because they're no longer gonna be able to do that. They can't count on appreciation. They have to fall back on real fundamentals for real estate investing, and that's gonna thin that crowd as well. So that's certainly a good thing. Another big benefit that I see with this happening for any investor out there is that now you get to build and fine tune the relationships that you have with buyers, with lenders, with the key people in your life and in your business that keeps you really moving forward. So what I mean by that is, if you have a buyer's list, if you're in the wholesale space and you're marketing and selling to active real estate investors, now is a time when you go back and you really fine tune those. You spend the time to go out to make phone calls to these buyers, make phone calls to these lenders, and build the relationship. Really, or continue to build those relationships. You want to understand more about what it is that they're buying. You want to understand what their buying criteria is, how much, how often. The same thing goes with the lenders. Understanding what they're willing to lend on, understanding what their lending criteria might be. And what this does is it allows you to build better relationships with these people. Whereas in the past, in the last couple of years, we've all been so busy with transactions and, sellers and just a lot of things going on that maybe you didn't have the time to go back and build those relationships with the buyers and the lenders out there that you really need to be doing. So here's your opportunity to do so. And this is just a couple of things that I'm seeing as positives that have come out of the coronavirus or COVID-19 so far. Now, what have I seen from a business standpoint? How has our business changed over the last couple of weeks? Well, I'm just going to talk on this because I've seen that this happened very, very, very quickly. Matter of fact, I was out of the country, and when I came back, it was the first time I really saw a big deal happening with the COVID-19 virus in the airports coming back into the country. And ever since then, it's really just skyrocketed. Everything just happened super quick. sporting events were canceled, trips were canceled, businesses started closing down, people weren't going to work. I mean, it all happened within a couple of weeks time period. And so, it was just a lot of change all at one time. Now, what happened was that buyers pulled back on buying. I know that thankfully this didn't happen for me, at least not yet. But residential retail buyers are backing out of contracts, leaving their earnest money on the table. Fix and flip and wholesale buyers are backing out of the transactions and leaving their earnest money on the table, which they were doing that because they were scared. It's scared money out there, right? And so we noticed that, a lot of buyers have really pulled back and are not buying at all, and or are just kind of waiting to see how this kind of unravels and see what happens in the marketplace before they buy. And if they are buying, they're buying at much larger discounts than they were before. Another thing that we saw is that and this is actually a massive deal, the iBuyers have pulled out of Phoenix. Now, I can't say where else they pulled out of, but I can tell you for certain that OpenDoor has pulled out of Phoenix and no longer buying in Phoenix. Zillow has pulled out of Phoenix and is no longer buying in Phoenix. And I want to say OfferPad has as well, although I have not confirmed that completely. Somebody actually just reached out to me and said that they got an offer from OfferPad, but I'm not sure, just today, but I'm not sure what that means. So, or how that's going to look, or if that was a mistake or an old email, an old offer. I just don't know all the specifics. But what I mean to say is that these iBuyers have pulled out of Phoenix. Now, there are several thousand transactions and contracts that these iBuyers had in place with different sellers out there. And now when they pull out of the market, that means they cancel those contracts. Well, what that means is that now all of a sudden those sellers still were willing to sell. And so what does that mean? Well, that opens the door for us as wholesaler and fix and flip and buy and hold investors to capitalize on that, right? Because they're still going to have to sell. They still want to sell. And so we have noticed, although I shut off some direct marketing for the last week and a half, we're seeing a massive uptick in seller phone calls. And that's from OpenDoor and OfferPad and Zillow offers that had fallen through while these people still want to sell. Now, the unfortunate part is that they still think that we're willing to buy it for the same price that these iBuyers are willing to buy it at. And that's just strictly not the case, because obviously that's why the iBuyers pulled out. So when negotiating with these sellers right now, we're seeing that they're not happy with our offer and they're not actually accepting it right now. But that we're just going to have to see what happens in the marketplace. I still think it's still too soon to make any judgment calls onto what this market is going to do for now. There's definitely going to be a ripple effect, this whole scenario happening with the businesses being closed down, the sporting events not happening. That means that money has stopped to these areas, right? People have lost jobs, and when you lose jobs, that means you can't make your payments. That means you can't go to the store. That means you can't go to the movies. You can't take your family on vacation, et cetera, et cetera, et cetera. Matter of fact, people that have short-term rentals for Airbnb, for VRBO, things like that, probably are feeling a massive effect of this right now, where they had a lot of cancellations from those tenants that were going to be coming into the Phoenix market for the best part of the year, which is right now. It's currently March 25th. And for all of you that have not been to Phoenix, March is most beautiful. It's March, April, really February, March, April are just so beautiful here in Phoenix. And that's when we have a lot of tourism that comes to Phoenix. That's when spring training is going on. That's when there's a golf tournament. The Waste Management Open comes to Phoenix. We had the Super Bowl here. Obviously that's in first weekend in February. So, these Airbnbs over the last couple of years have really started to pop up everywhere. And people were banking on that for this year. So all these cancellations is really, it's a big deal. And so what I think we're also going to see is an uptick in listings for people that have these Airbnbs and realize that maybe the market is changing. And so they're going to go and they're going to list these properties on the open market on the MLS right now. So we're going to see an uptick of listings that way. Business is just different. I think that there's a lot of unknowns and uncertainty. I know there's a lot of unknowns and uncertainty in the marketplace. And what this is doing is it's causing people to pull out. It's going to cause an increase in listings on the MLS, which is actually going to, I think, drive the prices down a bit. We've been in a very heavy sellers market for quite a while, where there's been very few listings on the market, and so you don't have, as a retail buyer out there, you don't have a lot of options to choose from, and so you're willing to pay a little bit higher price. Well, as listings start to increase and there's more options out there, that's going to drive the prices of the houses down a bit. So for a fix and flipper out there that is, has been counting on the market to appreciate, and have, on the day that they bought it and started the remodel, they could count on that, 3 or 4 months later, the market will have improved probably 10% in that amount of time. Now that is not the case. And so, we're going to get into some steps that I'm taking and that I encourage others to take as well in order to survive this in a minute. But we're just going to see that, as listings continue to increase, there's going to be, a pricing shortage, and just a lot more MLS listings to choose from. Kind of like what I was saying just a minute ago, though, I think it's still way too soon. Anybody that's been following Trump and been following what's going on in the media, and we just don't know if it's going to be maybe a V-shaped recovery. What I mean by that is that it went down very, very quickly, as I said at the beginning of the call here, very, very quickly. So it can also uptick just as fast, if they figure out a cure and they get everybody back to work, and hopefully everything picks back up where it was, and even better than what it was. But at the same time, we could also say that it's going to go down, so now let's say that it doesn't. People stay quarantined in their houses for a little while, stay not going to work, stay, their kids aren't in school, business isn't happening, events aren't happening, travel's not happening, all of these things where money is being changed hands through different people and different organizations. Well, that, I believe, is and can be the start of a recessionary period. And so I'm always just preparing for that, and I think everybody should as well. And so what does this mean? What are some steps that you can do to survive when we go into any sort of recessionary period, and what should we be doing right now to make sure that you can, continue to flourish even when times go south? Well, we all know, and anybody who's in the investment space has heard that, when there's blood in the streets, there's opportunity. Anytime there's a down market, that means there's an opportunity to buy everything on sale. Anytime that there's a down market, you're going to come across opportunities. Those that have access to capital, have access to money, are liquid, things of that nature, are going to be in a really good position to capitalize on the marketplace. And so let me tell you a little bit of how I'm positioning myself, my company, my team here to capitalize on it, and some steps you probably should be doing as well. Number one, don't stop marketing. Don't pull back. This is not a time of contraction. This is a time when you should increase your marketing. You should increase your communication and build those relationships. As I was talking about at the beginning of the call and some of the benefits of this COVID-19 coronavirus, you should be building these relationships. So that means that you should be marketing for buyers, building your buyers list even better than what it has been now. Marketing for lenders, or going out there and building relationships with lenders that maybe you have in your marketplace. Maybe ask your family, your friends who might be interested in lending with you, and just lining up the money, putting the money in a spot where it's in a place where you have access to it right away, so that you can capitalize on opportunities when they come in front of you. Because like I just said, when there is blood in the streets, there are opportunities. When there is a down market, there are opportunities to capitalize on buying things at a massive discount. So you want to be in a spot where you can do that. What that means is that you need to be lining up those relationships. So don't stop marketing. And when you're marketing for buyers and for lenders, also be marketing for sellers, because right now this might be the time when they really need it the most. with these iBuyers pulling out, now all of a sudden these buyers are stuck holding the bag, so to speak. They have a house that maybe they've already moved out of, maybe they already had plans to move out of, maybe they made a down payment on a new house, and they were counting on the sale of this old house, and now these iBuyers just pulled out. So they're going to need you. And so don't stop marketing for that, right? A lot of people, I think, and I've heard from different conversations and relationships I have with other investors in town and across the country, that some people have gone into a contraction mode where they're saying, oh, I'm going to hoard my money and I'm not going to spend any money right now marketing. Well, I think that that's probably the last thing you should do. I think you should actually do the opposite. You should continue to market and market in places that's certainly necessary. As I said at the beginning of the call, there's a lot of buyers that have pulled out of buying here in the Phoenix market. Buyers that were buying 3 months ago are no longer buying. They put a freeze on everything. Lenders that were lending 3 months ago are no longer lending. So, reaching out to these buyers and building that relationship, really understanding what it is that they're buying, why they're not buying, when they're planning on buying again, what is their buying criteria, et cetera, and really documenting that and putting it in a CRM of some sort will benefit you greatly, because if you have access to the capital and you have access to the buyers, then you can very well navigate through these sellers and making sure that you can close on the offers that you're making. Another thing you should do is take this time to go through your database. Now, I don't know if anybody's listening to this call that doesn't have a database. You need to stop right now and stop everything you're doing and start a database today, right now. You need to be working on a customer relationship management tool like a CRM that documents all of your everything about your business, documents your buyers, your sellers, your relationships, your contracts. Everything about your business needs to be in a CRM because it'll make your life easier. So that's step number one. But those of you that have a database, start to go through that database. So sellers that might have said no to you 3 months ago, 6 months ago, a year ago, 2 years ago, 5 years ago, revisit those people. And in addition to marketing for these new sellers, go and remarket to your existing database. One, you've already paid for them, so you don't have to pay for them. They really, the cost of them is zero today because you've already paid for it. And two, there are going to be opportunities there. They might have said no 3 months ago when they had OpenDoor, OfferPad, Zillow sitting at their doorstep saying they're going to offer a ridiculous price. But now that those iBuyers have pulled out of the market, now those sellers are in need of you. So make sure you go back through the database and, touch on those people. See how you can help them. Like I said, this might be the time when they need you the most. Cut unnecessary spending. So I think I touched on this earlier in the call as well. Go through your P&L. Go through your P&L for your business, for you personally. Stop spending money on stuff you don't need. Save your money. I'm not a big proponent in, saving money. I like to, all the time. And when I say saving money, it's like, you should be focused on how do you make more money, not necessarily how you save it. But this is a scenario when you have the time, when you can go back, you can look at your P&L. You can really look at line by line, what am I spending money on? And you can figure out how you can save on some monies that way, right? Go through the database, just go do it. I mean, and not only that, but you'll really thank yourself. You should be doing that on a monthly basis anyways, but I understand everybody gets busy and gets sidetracked. Can't necessarily do that every single month. So now's your opportunity. If you're out there and you're fix and flipping properties, I don't think I have to tell you this. You probably have already cut back on all of your buying criteria, but what I can tell you is that there's still buyers in the marketplace. Right before this coronavirus hit, we were booming. There were people moving to Phoenix. There were people moving to the big cities. If you're not living here in Phoenix, if you're in other places of the country or of the world, the economy has been booming. And so there are people moving here. Those people didn't go away. If you're out there and you're wanting to buy a house, and you've been wanting to buy a house, you've been looking to buy a house, you're still probably in the marketplace to buy a house. And so, remodels, you can do remodels and they're still going to sell. They might not sell for the, the pushed high price or a higher ARV than that you were expecting, but they will still sell. And so what I'm cautioning people and investors out there is just don't do any massive remodels, at least not for the short term here. Obviously, if you have one that you've already started and you have one that's halfway done, don't stop. Just get it done, get it on the market as quickly as you can. Somebody should buy it. And I would really just not put yourself out there that way. The big remodels could be how you get into some trouble, especially with hard money costs and all of that. So what we're doing is we're kind of stopping all the remodels totally and just kind of really focusing on wholesale right now, just to put as much cash as possibly can, converting everything we can into cash. Want to be in a really strong cash position. As I talked about with being blood in the streets, you want to be in a really strong position when those opportunities come where you can capitalize on them. So if you're not heavy in cash, it's going to be very difficult for you to do that. So convert everything that you have into cash. So if you were going to fix and flip a property, maybe throw it out on a wholesale and try to see if you can make 5, 10, 15 grand on it quick, to just stuff that cash into your pocket instead of waiting 30, 60, 90, 120 days to sell a rehab that might give you 30 or 40, right? Maybe you take that quick dollar today and you just stash it in your pocket and keep moving forward that way. Convert everything into cash. What I mean by that is that in addition to what I mean by that is if you have lines of credit with your bank, business lines of credit, personal lines of credit, maybe it's a good idea where you convert that into cash. You actually transition that money from the line of credit and put it into your bank account so that you have it. Now, I'm not saying that this is going to happen or it's not going to happen, but back in the Great Recession of 2008, banks froze all credit lines. So if you had, $100,000 line of credit and the bank freezes it, no longer do you have that $100,000 line of credit. So maybe for the short term, maybe convert that money, put it into your checking account for now, into your business or personal, whatever you work out of checking account for now. You might have to pay a little bit of interest if it's got to be a month or two until we figure out that, what this real effect of the coronavirus is going to be, but at least you have access to that capital now. I know that's what we've done as a company, personally, as a business, just to make sure that, we have access to those funds. If you have free and clear properties out there, or you have properties that have significant equity, maybe you don't want to go refinance it necessarily right now. You don't want to restart the clock, but why don't you go take out a line of credit or see if you can. Go to a local bank. They're actually seem to be much better at giving lines of credit that are a little bit more aggressive than the bigger banks. But, shop your options out there. Try to figure out who can give you lines of credit on your properties, or if you have a portfolio of properties, maybe get a portfolio line of credit out there. These are just options I would talk to your banker with to figure out how you have access to this capital. From a buying standpoint, you got to buy at a larger discount. Where we were buying at before, you got to discount that number because for a couple of reasons. Number one, the ARVs that we were pushing over these last 2 to 5 years no longer are going to be the case, and so you need to anticipate that those ARVs are going to go down, and you want to buy at a bigger discount because a lot of buyers have pulled out unless they can get killer deals, and so you want to make sure you can provide those killer deals to them. Now, this goes back to building the relationship with these buyers to understand where they're buying, how much they're buying, what type of discount they want, what type of house they want, et cetera, to really understand what they are willing to buy. But I can tell you, the bigger discount you can provide for them, the more people you're going to have to be able to sell to. I mean, that's just common sense. With the and even with that buying at a larger discount, right now in the short term, with these iBuyers leaving town that maybe have provided offers for these sellers at a stupid high price, and or just sellers that have been solicited by other investors that have given them a higher price. When you give them a lower offer price, they might not like it. But do not discount the fact that they're now in the market to be a seller, because even if they don't like your offer today, present it to them. Write lots of offers. Go on lots of appointments. If you were going on 1 appointment a day, now go on 2. If you were writing 1 offer a day, now write 2. If you're writing 2, write 4. Just double the production, because now all of a sudden, if we do see a downturn in the market, then these sellers are going to come to find reality real quick, and they're going to be calling you to make an actual offer. And when I say an actual offer, don't just give it to them over the phone. Write them a physical offer and either mail it to them, at least send them an email, send it to them DocuSign, get them in a position where they can take action if they want to. Because what's going to happen is that reality is going to catch up to them. And if, these iBuyers, or if other investors have made high price offers to them in the past, you make a lower offer. They don't like that in the short term, but when they realize that original offer that was presented to them isn't actually real and isn't going to come to fruition, they're going to be giving you a call, and you want to make sure you're in a place to do that. Get a contingency plan on deals that you already have pending right now. And what I mean by that is, you want to, if you're wholesaling houses, get a second buyer in place. Make sure that if your original buyer pulls out, if you have a pending contract or whatever, and this is really just good common sense, probably something that everybody should do anyways, but it doesn't always happen that way. Make sure that you have a backup buyer in place. Make sure that you have somebody that if buyer number 1 decides to default and you take their, they give up their earnest money, then you have a buyer that can close on that. And worst case scenario, make sure that you have the lenders lined up for you so that you can close that deal if you must, right? So make sure that, the contingency plan accommodates a second or third even buyer in place. And at worst case scenario, have a lender that's willing to fund it. Another thing you can do is increase the earnest money that you require your buyers to put down, so that that they got a lot more skin in the game. Whereas in the past, we've only asked for $3,000 or $5,000 on down for an earnest money deposit. Now we might increase that to $5,000 to $10,000 down. Now, of course, that earnest money goes to the purchase price of that asset. But what we want to make sure that people have skin in the game, because anymore, what's $3,000 or $5,000? I mean, you have to make sure that they're real. And so we've kind of increased our earnest money deposit. Overall, those are some steps that I know that I'm taking as a company, and personally, to kind of combat this whole scenario. And I hope that you've got some things out of this call that you can go implement right away, and some strategies and some thoughts that, will help you kind of navigate through a potential downturn that we're just starting to go into. I've heard a lot of people talk on this point. I'm sure everybody out there also has as well. And the reality is nobody knows. So, let's just call that what it is. Nobody knows what's going to happen yet. Nobody has a crystal ball, and this is not 2008. This is not, this is not the Great Recession. The same factors are not in place. This was an external, an external threat that came into our marketplace, and so it's going to operate differently. No 2 recessions, I believe, are the same. If they were, that means that we didn't learn from our mistakes, which, can be argued. I guess that happens every time, but I just think this is different. So, in the short term, everybody can take these steps that I provided for you and try to implement them in your life and your business and see what happens. I'm eager. I'm excited, for just to kind of see how this all unravels, because I think we've just been in such a healthy market for so long that now this is going to really uncover the real investors in the marketplace, and this is going to really uncover the real, people that are able to weather the storm. And like I said earlier, it's going to kind of thin the herd of the people that shouldn't be here to begin with. So once again, this is the 100th episode of the INVESTTHIS podcast. I'm super excited to be able to be here today for you. Hopefully you got a tip, a trick, or an idea out of this podcast you can implement into your life and business. And I want to thank you for being here. I want to thank you again for being here. for being a loyal listener, for sticking by us for a whole 100 episodes. We're going to keep providing value for you. Matter of fact, over these next few weeks, I got some really exciting podcasts, so you're not going to want to check that, or not going to want to miss that, rather. And, you know, if I could ask one favor from you, that would be to like the podcast, subscribe to the podcast, and even better, share it to your friend, your family. Put it on your Facebook page. Just let people know that you're listening, you're getting some value out of it, because that's ultimately the reason why I'm doing this. And hopefully you really got some good value out of this. So with that being said, once again, thank you for being here for the 100th episode of the INVESTTHIS podcast. You guys stay healthy, stay safe, and we'll talk to you next time. Thank you so much.